All right, good morning. Welcome back here to Trader Winning. Great to have you aboard. My apologies for being away yesterday afternoon. Unfortunately, it was unavoidable, and I apologize there for that. Everything's good, but anyway, back into the flow, back into the routine here. Later on today, going to be doing a video, and I'm looking at about 1 o'clock Eastern. Here for it. Be doing a video talking about this upcoming earnings season and some of the data going into earnings season, some of the things to expect, some of the stocks that I think are going to be very interesting around earnings, and we'll take a look at that here at about 1 o'clock Eastern time today. Now, market's getting ready to open in about 30 minutes. S&P futures are down about 8 points here. Most of the drop coming here recently in the last hour, as U.S. President Trump tweeted out, basically, well, here, let me get it. I'll read it here. Trump tweet. And whenever you see, these days in the market, you see a big move and it's not coming in on the normal news services, you just pull up U.S. President Trump's Twitter account, and normally it's right there. The World Trade Organization finds the European Union subsidies to Airbus has adversely affected the United States, which will now put tariffs on 11 billion of EU products. The EU has taken advantage of the U.S. on trade for many years. It will soon stop. All right. What's interesting about this is the World Trade Organization also found Boeing to be used or getting illegal subsidies, but none of that's mentioned, and nor will it be. But U.S. President Trump is using Airbus and the subsidies to threaten $11 billion in tariffs here on the EU. So. Same story, same saga, right? And a story and a saga and a drama that's going to play out for years to come. It's not like we're going to wake up tomorrow and all of a sudden, trade talk and trade war stuff it's over, right? It's just not going to happen that way. This will be drug out for many, many years to come. The U.S. versus China, U.S. versus the EU, the U.S. versus Mexico, the U.S. versus every single trade partner as, trade deals are renegotiated, as trade deals are, redrawn up. And, ultimately, how will that play out? Will it play out with, with the U.S. Kind of losing some clout in the world community, or will it actually elevate, the U.S. economically? There are arguments for all of the above, but it's clear. We saw last night, we saw the European Union and China kind of come out with a joint statement when it comes to trade and trade with the U.S., so trying to, put up kind of a joint front there. We have seen the EU and China negotiating on trade for many years and, using very friendly words, but not, EU not really getting what it wants in terms of lower trade barriers with China as they continue to, keep those trade barriers pretty high, with the rest of the world. But EU, China, big trade partners there. I'm not sure how they rank here with the U.S., but I'm sure it's comparable. But anyway, that's driving S&P futures down just slightly here this morning. Is it that big of a deal? Now, price action-wise, no, it's not. Price action-wise, it's not something you look at and go, "Oh, wow, this is this is pretty incredible. This is something pretty dramatic." Price action-wise, it's just okay, another little blip. But we've seen these blips of 10 to 12 point sells, and they've all been bought up to new highs, relatively quickly overall. Now, we don't have a lot of data or information coming today, meaning no real earnings, no real economic data, set to be released here today. So markets are kind of, a little bit adrift. We saw that yesterday, with the low volume Monday type action, and kind of that typical bleed into the close that we have seen. But I expect similar action today. I don't expect game changing action today. To take place in the market. It would require some sort of catalyst for that to happen. But I still think that the lows from yesterday are matter. I think whether you're bullish or bearish, this is a key level that you're watching, and it's a level where if this level breaks, you look and you say, okay, you know what, maybe I need to trim some bullish positions or pull them off. If it breaks all without being oversold, meaning if it just goes straight down to here, I would expect a bounce. But if it, we see it bounce and then drift and then bounce and then drift and then it breaks, I would suspect that, Bears have a play back here to kind of last week's lows and, in the short run here. But, in all, still looks like the market wants to print that new high, out there with the S&P. So, not something, this is definitely not topping action. We're just talking about small waves here, and what is a monster fierce upward trend out there in the market. Now, we do see bonds pushing on higher here today, starting to see some analysts talking about the banks, starting to see some, reports coming out about the banks going in earnings season. I'm worried about bonds here with the banks, and I suspect we're going to get a lot more of that. We also have gold trading up about $8 here this morning. We saw it yesterday kind of, make this rally and then pull on back, here into the close, but here overnight, it's pushed back into a new high. These types of moves are not atypical for gold. These are standard, these are normal, and the gold trade can be quite choppy, but as we've talked about, the short term on gold is always choppy. The trends, though, tend to emerge, and they tend to be strong when they emerge, and we are definitely seeing a trend when it comes to gold. Now, we talked about a breakout in oil back in March, and in fact, let me just pull up a stock chart here, and let's go WTIC, and let's get rid of. Well, let me sign in here. There we go, and then let's get rid of the. We'll get rid of all the indicators because we're not really interested in those here. But we'll just kind of clean this up. And here we are with the chart of oil. And because oil has had, an absolute monster 2018. Now, or excuse me, 2019. Now, some of the numbers, just because of where the sell-off ended and the rally began, some of the 2019 numbers just look incredibly strong. If they were compared to kind of the end of November, they look a little different. But, this is kind of the comparison date. And we see oil up, almost 50% here this year. Just an absolute monster move. Now, if you take it and you throw on the retracement from this monster sell-off from October to December, you're going to see that oil yesterday broke through the full retracement level, right, here at 64. It broke through this full retracement. Now, it broke through it on news and the catalyst. And the catalyst here yesterday was, more civil upheaval in Libya. And when you have, some of that, you definitely get a little boost in oil. We saw it rally about 2% on it. Most of those things kind of come and go. Though this with Libya does look like it could be a little bit more of a supply shock than normal. But, that helped to push oil on higher. We've seen the rig data here in the U.S., and the number of rigs going up has been, remarkable as the price has risen. The number of rigs is rising. Last month, U.S. oil production hit an all-time high, and it's only rising. And, some of the oil pushing back above 60 give some of these drillers that, some of these higher cost drillers impetus to step in and say, all right, we can drill now because we can make money. It cost us $58 a barrel to pull it out of the ground. Well, at least now we can sell it for $63 a barrel. That this move in oil has made U.S. production a lot more viable, and only will continue this trend of really boosted U.S. oil production. But I do think this is a level to kind of keep an eye on. There are multiple wins here within the oil sector when it comes from an economic standpoint, when it comes from a drilling standpoint, when it comes from a geopolitical standpoint. And you can make a bullish or bearish argument surrounding any of those. Goldman Sachs came out yesterday and said they expect oil to go to 72 and then to fade for the rest of the year. That's an interesting short-term call. We see them make some of these calls, in the past. That did help to push oil on higher, but that would be a full break of this retracement level, which, given everything going on, we could definitely see. But I think that this is one where, you take a look at the weekly close on Friday and this kind of 63.10 level. And as long as oil holds that, I think you still have to look at it from a bullish standpoint. I think the market will look at it from a bullish standpoint. 63.10 breaks, I think the market will start to step back and go, wait a minute, what's going on here? Any sort of resolution to what's going on in Libya, I think the market will, step back and go, wait, okay, this is a little bit of an overreaction. But, it doesn't look like there's going to be any real short-term resolution in Libya. It doesn't look like there's any real weakness coming into oil. And, let's face it, oil has continued to rally in the face of weakening economic data, right? Just like the markets and everything else. And we've talked about that. So, this is one where, Goldman's talking about this 72 level coming in and, could very well come into play. If we do get up here to the 72 level, and it's not coupled with economic growth, the supply imbalances around the world are going to grow, and they're going to grow sizably. And we already have OPEC worried about those, supply imbalances. They've been cutting production and holding production low. But at some point, they're going to have to, raise production. They're going to have to try to stem the tide of U.S. production. And that'll be an interesting battle that I expect we'll see later on this year and into 2020. And a battle that I expect will have major implications in oil prices. One that, not going to happen yet. It's not on the radar yet. It's not going to take place yet. But later on this year, I think it's going to be one of the more interesting trade areas and one of the more interesting arenas, especially for the challenge. So I'm looking forward here to that. All right. So anyway, those are some of the things kind of going on this morning. Some of the things taking place out there in the market, and again, it's not really a game-changing type of setup or open for a lot of things out there. Things indicated to open slightly higher or slightly lower. But, not a whole lot of game-changing. One exception that I forgot to mention, U.S. Steel, big gap down here this morning on an analyst downgrade that was pretty damning here for the company. And, they talk about a tsunami of steel supply hitting the market in 2020 and 2021. And, they talk about that with U.S. Steel's lower market share, lower market position, and really quite a damning piece when it comes to U.S. Steel. And I don't think this is an overreaction when it comes to the price of the stock. And I think this is something where you can make arguments for U.S. Steel to go single digits at these days now. Especially when you look economically what's happened, when you look at what's happening strategically with their business, where they're getting squeezed out of major areas and losing market share in the automobile industry. It's pretty ugly here for U.S. Steel. Nucor, you'll notice, not the same type of reaction. Right? This is not a Nucor. This isn't a whole steel sector issue. This is an individual, hey, U.S. Steel. Now, AK Steel does a few things that U.S. Steel does, so they're going to probably have a sympathy reaction here to them. But, Nucor just continues to be the leader of the pack when it comes to the steel area and, the outperformer. While AK Steel, AKS, and U.S. Steel just continue to get browbeat down and continue to lose market share, continue to be in a competitive environment that's just a lot tougher here for them. Despite a lot of the trade talks, despite a lot of the trade concessions and things, that's definitely not helping U.S. Steel, AK Steel, and some of these United States steel makers. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.